The S&P 500 has rallied in 2024 as investors cheered resilient earnings growth and Fed rate cuts. However, the New York Fed's recession probability model suggests there's still a 57% chance of a U.S. recession sometime in the next 12 months. Now, that should scare you, but it kind of excites me. It gives me the tinglies, and I want to tell you why. 2008 was the last Great Recession that we had. It was called the Great Recession because it's the worst recession since the Great Depression in the 1930s. And at that time, the sky was falling and everyone said real estate is the worst investment, and we had huge foreclosures and a bunch of homes that had gone up in value that people had paid high prices for had now come down, and since they were upside down, they gave those homes back to the bank and they destroyed their credit. And there's a ton of people still today that are still moaning and groaning about 2008. But for me, 2008 was a crazy opportunity. In 2009, I went into the markets that had fallen the most, like Phoenix or Las Vegas, and I was buying up these houses for $100,000 that a year earlier were selling for $250,000 or $350,000. Now we know how that story ends. If you buy something that far below the market, all you have to do is wait a number of years, rent it out in the meantime, and eventually they're going to start building homes again. And we know that it costs a lot more to build a house than $100,000. And within 5 years, those homes went back up. Not to their previous highs, but that house that I had bought for $100,000 was now worth $200,000, $250,000. And in time, it was going to go back up to $300,000, $400,000. But I got out long before that happened. In other words, when everyone was selling, I was buying. And when everyone is buying, I'm selling. The people that make the most money in a recession are literally counter-cyclical. They're doing everything totally opposite of what everyone else is doing. Like right now, the last couple years, look at the game of real estate. Have people been buying real estate? They haven't been. They've been waiting. Do you know what I've been doing? Buying as much as I possibly can. But now we're moving into a recession. And what am I doing to prepare myself, and what should you be doing? Check this out. So if we're moving into a recession, you want to stop investing in high-risk stock and you want to start increasing your cash holdings. You want to have something to deploy, because if there's a recession, it's going to create problems. And really big problems pay huge dividends if you have money to invest in them. So first and foremost, start hoarding your cash. Now I'm going to tell you right now, I got some of my buddies that are liquidating hard. They're literally selling their assets. They're cashing out. And it's not because they're investing in cash. It's because they're waiting for the moment to strike the biggest opportunities, and you're gonna need some cash to do that. Also be aware that there are certain stocks and market sectors that tend to outperform the rest of the market during recessions. For example, utility stocks, healthcare stocks, consumer staple stocks. These are considered smart investments because their earnings tend to be insulated from economic cycles and swings in consumer confidence. But if you're asking me if I'm investing in the stock market, no, I'm not. I'm investing in real estate. And that's because real estate is about as recession-proof as it gets. First and foremost, real estate is a hedge against inflation. And you might be asking, well, what does that really mean? Let's go back only a few years. What happened in 2021? Well, real estate prices skyrocketed at the same time that inflation skyrocketed. In other words, when the dollar loses its value, the price of real estate, a real hard tangible asset, increases dramatically. Inflation is really bad for your 401k or for money in the bank. It's bad for your IRA. It's bad for anything that is soft that you can't touch, right? It's just a digital number. Soft assets, they struggle with inflation. But hard assets, collectibles, jewelry, art, and real estate in particular, they do the opposite. They basically fluctuate with inflation. So when inflation is really bad, real estate is doing really good. Real estate is also considered recession-proof because it fulfills a basic human need. While the stock market can go up and down everywhere else, people still need a house to live. That basic human need of shelter remains in demand even during an economic downturn. Not only that, but property just appreciates over time. Like, take recessions out and just average out the last 65 years, and the average piece of real estate in America goes up 4.65% each and every year. Now you might be sitting there thinking, but Kris, I don't have money to invest in real estate. In fact, if you buy real estate, you need lots of money, right? Like, don't you have to have like a 20% down payment? And that's like on a $300,000 or $400,000 house, that's like $100,000. Like, that's a ton of money. But you should be aware that there are some super affordable options that allow you to get in the game. Here are 3 different options right now. The first one is called DIY, do-it-yourself real estate. Wholesaling, fix and flipping. It's like a full-time job, and it's basically buying real estate under market and then selling it at market value. And the reality is, if you can do that the right way, you can make $30,000 or $50,000 on a flip. Experts can even make $100,000 because they're good at finding really good deals. The good news on that one is it doesn't really take any capital. Like, there's a way for you to get in the game by saying, wow, what I'm bringing to that market is I'm finding a good deal. And if I find the good deal, someone, an investor, someone out there will give me the cash to actually do the deal, which ends up being very true. The second option is what's called a REIT. Basically it's real estate stocks, right? It's a chance for you to invest in the stock market, go find a REIT, they pay dividends, and it's a way for you to passively invest in the game of real estate. The upside is they outperform traditional stock market. The downside is they don't outperform it by much. So it's a little better than the stock market. It's definitely not what I would call a hidden opportunity for a ripe recession. Your third opportunity is to get in tight with successful real estate investors that have a huge history of knowing what they're doing. For example, over the last 20 years, I've done $2 billion in real estate transactions. I've transacted thousands of deals, and I've learned how to make the highest returns. And I have, for example, a public fund. It's called the Kronos Fund. It requires a small investment, like $3,000, $5,000, but it has the possibility for very high returns, potentially higher returns than REITs or even DIY real estate. And if you're sitting on $50,000 or $100,000 or more between equity in your home, 401ks, IRAs, there's even a chance to partner directly with me, and we'll literally go out into the market. Me and my team will do all the work. We will buy the very best real estate, and we'll split all those profits equally. If any of those options look good, either, hey, I just want to be passive and throw some money in your fund where I need very little amount of money, or if I'm interested in actually partnering Kris and bringing more money to the table, you can click the link below. Let me show you how to recession-proof yourself as much as possible. Click that link below and select an option that really makes sense for you, even if it's the Kronos Fund, where a little bit of money has the possibility of earning some very high returns, especially in a recession. Click the link below. Let me get you educated on those options right now. Now check it out. You hear me talk about real estate a lot, but when I'm not putting my money in real estate, where am I putting it? Where do I even keep it safe? Well, check it out. You know that I love investing in real estate, and I'm inviting you to build a real estate portfolio. But along the way, you're gonna have to stash some cash and you're gonna have to save it up. Would it surprise you if I told you that you shouldn't be saving your money in a bank? There's another place where I save my money that literally makes me 50 times more money, and it's also untouchable. It's one of the smartest things that you can do with your money. If you don't know what it is, I want to let you in on the secret. Click right here and let me show you.